because in 95, the banks needed more money to gamble with, and so they passed Reg D. This is important because it sets up the bail-in that is legal today. The Reg D encourages leverage and at-risk deposits because it sweeps whatever you deposit into the account into sub-accounts in the bank's name. That's what gives them the authority to use your equity for their benefit. And it also is cheaper for them because they don't have to put money on reserve in case you pull those deposits out. See, so it's like a win-win, but it really makes things a lot riskier for depositors, and they don't even realize it. But they call this deposit reclassification. Isn't that nice? And guess how you agreed to it? Well, you just kept using the account, but it definitely diminishes investor protections, and it sets the stage for bail-ins. So what's the bail-in? Well, this was tested back in 2013 in Cyprus. And I'm going to show you that in a second. But then the Bank for International Settlements, which is the central banker's central bank, came in and formalized and gave the world a template on what this would look like. And what I think is interesting is that the first bar chart shows with no insured deposits. So in Cyprus, they just took everybody's money, period. And then the whole world went, oh, wait, what about deposit insurance? What about deposit insurance? So then they backed off and they honored that, although people still had no access to their funds for a number of years after they did the bail-in. And if you had money in there and they bailed it in, you were not getting it back. Just that simple. So let me show you what that looked like. This is the May 3rd, 2013 test, because they needed to see how people would react. So they run these tests way over there. So you could go, why are you talking to me about this, Lynette? That's in Cyprus. I live in America. That could never happen here. Well, it's legal if it happens here, and they needed to see what people would do. But what I want to show you in this that I think is so interesting, this red line are domestic deposits. So that would be like you and me depositing into our account. This black line were German and French banks. And you can see that when Cyprus became part of the EU, they had higher interest rates, so your German and French banks made lots and lots of deposits into mid-2010. But these bail-in things, these plans, they don't just happen on the fly. So isn't it quite interesting that while domestic deposits stayed very stable, all of a sudden German and French banks got the Hades out of Dodge? Then there was a bail-in. Is that a coincidence? I'll let you decide. Personally, I don't think it's a coincidence, but you can decide. These are just the facts. You get to formulate your own opinion. So they've run this test, and it's based on eminent domain laws, because the government can take anything they want as long as they pay you fairly for it. Well, what these depositors end up with were shares in failing institutions. Who decided how much those were worth? Maybe the failing institutions. And what are you going to do with shares in a failing institution anyway? I mean, really. But hey, eminent domain law satisfied, bail-in complete. Too bad, so sad, nothing you can do about it. And by the way, CDs and bonds were also converted into shares of stock in the failing institution. So I get a lot of people that ask me, well, what about CDs? What about bank bonds? Well, there you go. If you like this clip and you want to watch the full video, just click right here. And to subscribe, click right here.